Hi, I'm Jeremy Wilson from Drafton & Tucker CPAs, and I'd like to take a moment to talk to you about the Tax Cuts and Job Act of 2017. On December 22nd, 2017, President Trump signed into law this act. It represents the most sweeping changes in tax legislation in the last 30 years. It will affect nearly every taxpayer, individual, and business. Today, I'd like to take a couple of minutes to talk to you about some of the impacts that we see coming on the businesses in this country. For C corporations, we received a flat tax rate of 21%. This is down from a maximum of 35% under the old law. This reduction is expected to increase the economy through trickle-down economics. For C corporations, we also eliminated the alternative minimum tax regime, also known as AMT. This will simplify the process by which corporations will calculate their tax liability and should alleviate some of the strain on those companies. In looking at pass-through entities, which are represented by partnerships, LLCs, and S corporations, we created a deduction of 20% of the income coming through those pass-throughs. This is expected to be a cumbersome calculation for many companies, and we are awaiting additional legislation as well as Treasury regulations to show us how those calculations will operate. Moving into depreciation and cost recovery on our fixed asset investments, we received some significant increases there. Bonus depreciation under Section 168K will be increased for both new and used business assets, and the expensing will be at a rate of 100%. For Section 179, which is also an expensing mechanism of capital asset investments, we will be able to write off up to $1 million with that amount not being reduced until asset acquisitions for the year exceed $2.5 million. Both of these represent significant increases and should assist those businesses that are heavy in the capital investment. Additionally, on the depreciation side, we received some enhanced cost recovery on our vehicles. These will phase in over a couple of years and should help businesses stimulate cash flow on that side. For those businesses with average annual gross receipts of $25 million or less for the previous 3 years, we received some simplification in which we allow for cash basis accounting for those companies, simplified inventory accounting methods, and for those companies with long-term contracts, the opportunity to use the completed contract method. In all of these changes, there will be many nuances that will come through regulation and additional agency guidance. We are monitoring that carefully, and should you have any questions or concerns or would like to discuss how these impacts will affect your business, please feel free to reach out to a Drafton & Tucker professional, and we'd be happy to discuss those with you.